What is up, everybody? Welcome back to my YouTube channel. Just before we proceed with this video, let's do a quick recap of the previous episodes. So in the first episode, I introduced market structure. In the second one, I introduced internal or substructure. In the third one, I introduced liquidity. In the fourth one, I introduced fair value gaps. In today's video, I am going to be discussing market structure shifts, market structure breaks, and liquidity grabs. Okay, so I'm going to be starting with the market structure shift. What a market structure shift is just a change in trend direction. Okay, what it may look like is what is shown on screen right now. Okay, the core of what a market structure is in itself is a break of a previous higher low in a bullish trend. That's all that it is. So imagine we were bullish, so we create a higher high here, this becomes a higher low, we create a higher high here, this becomes a higher low, we have a higher high here, and then we come back and break the previous higher low with a very big candle, and we close below that higher low, preferably leaving a fair value gap as well. This is what we are considering as a change in trend direction, because the next candle from here, if you remember what we spoke about in the fair value gap, will come and test this fair value gap and try and fill it. But the moment we have a close below the 50% of this fair value gap, that then potentially becomes our new lower high, and we would be looking for price to continue to the downside. Okay, so that's all that it is. I would prefer my market structure shifts to have to look something like this. They don't always look like this. Sometimes we could get something like this. We could get something like a high being formed, then we have a low, then we have a lower high just being formed, and that. So the break of this area here is what we would be considering our market structure shift right here. That break is what we would be considering our market structure shift. But typically, market structure shift would look like this. So we would have a previous high, which would get broken, creating a newer higher high. Then we would see a reversal, breaking the previous or internal structure lower high. Okay, so this is what a market structure shift looks like. I will be giving chart examples for those that don't really understand it when I do it like this, but I will give you a chart example. And then from here I can move on to a market structure break. So a market structure break is just it's a trend continuation. So we would have this as our previous higher high, we would have a pullback as usual. For example, we had external range liquidity here get taken, we created new external range liquidity, so a new higher high. And every time you create or you take external range liquidity, what happens? We start hunting for internal range liquidity. So that's this move down here. After this is done, what do? We are looking for external range liquidity again because we are bullish. Now what we consider as a break of structure is when we have a candlestick close above the previous high with displacement, preferably leaving a fair value gap as well. Okay, that's what we mean by break of structure. Again, I'll be giving examples for those that don't understand what I'm explaining here. All right, and then I can move on to what a liquidity grab is. So a liquidity grab is a failed break in market structure. Okay, so this would be our previous high, and if you look to our right here, you can tell that all the candles here closed below this wick or in the body of the previous high. But notice the wicks. The wicks wicked above the previous candles, wicks and highs, taking all sorts of stop losses, buy limits, sell orders, and all sorts of orders that are sitting up here. And then what do you see? You see the market later push to the downside, breaking this low right here, creating a fair value gap right there, doing what in this case? Shifting the trend direction. Okay, so I think I'm done with the textbook examples. Let's try and see if we can find some chart examples. Okay, so we are looking for market structure shift as a chart example. I'm going to go to the 4-hour. Alright, so I am going to pick this as my external range liquidity high. Okay, then I will pick this as my external range liquidity low. Then I'll pick this as the previous external range liquidity low that we have taken out. Okay, so we've taken out external range liquidity right here. What are we looking for now? We know that every time we take external range liquidity, the market looks for internal range liquidity. So it could be here, it could be there, it could be there. I will be making a separate video on how to properly find where the market is most likely to go for liquidity sweeps. Okay, so our market structure shift, if you remember what we said, we have one right here. So remember we were bearish here, so this would be the last lower high we were looking for. So we are just going to quickly draw or mark it out like that, a trend line. All right, so this is our previous lower high. Note how this looks exactly like the example I gave you. So the moment we break above this, we leave a fair value gap right here as well. We have price come back into the fair value gap, close outside this fair value gap right here, and look what happens. The market starts to move to the upside. Okay, so that's an example of a market structure shift. If you want another example, remember I said sometimes it could look a little different. Here's another one. So this would be what I consider as the high. Then this would be the lower high being created, but notice how this did not go above, it stayed within this wick, and then we get a break of here with displacement here, leaving a fair value gap. So this would be the other example of a market structure shift that I gave you right there. So I've given you examples of both market structure shifts, and then the next one is a break in market structure. I will be using the 4-hour as well. It doesn't matter whether I use the internal or external range liquidity, it all just does the same thing. So this would be our lower high, this would be our lower low, but notice how we break below here and close below that low, and then we have a push back up into the internal range. Okay, so again this becomes our, oh wait, these two of them, this becomes our high, this becomes our lower low. Do we have a break anywhere? The break happens right here because this is where we get the candlestick closes below this, or this is just liquidity grabs, and here that's an example of a liquidity grab as well. So you see how we took we wicked below these the wick lows but didn't close below. This is what a liquidity grab should look like. Then we go back up, but then we do come back down and we close below that, and that is a break. Then we have a pullback again into the range. Okay, so I think these are all the examples that you would need. I like to give examples because I learn through examples. If whoever is teaching doesn't give examples, it's highly likely I will not learn. So I am trying to teach these through examples as well. Then eventually I will start to put everything I am showing you into one video, and I'll continuously make the same videos until we all get it or we all get tired of them basically. Okay, so I think that's all I had for this video. If you enjoyed this type of content, please remember to leave a like, subscribe to my channel, and I will see you in my next video.